Hey guys, what is going on? Welcome back to my Robinhood portfolio. What I thought I'd do today is talk a little bit about real estate investment trusts, or REITs. These are companies that own and in most cases operate income producing real estate. You can kind of think of these companies as mutual funds or ETFs, exchange traded funds for stocks. They allow investors to invest in large scale diversified portfolios of income producing real estate in the same way a mutual fund or an ETF allows investors to do the same thing in stocks. You can buy one of these companies and you're essentially buying a number of underlying income producing real estate properties. And some of these REITs invest only in commercial, some only in residential, some in multi housing, some in single tenant only housing. There's a whole number of different types of REITs, but the important part is that they have very, very good dividend yields. They're a very, very good portal or vehicle for investors to get a dividend return. And by law, a lot of these real estate investment trusts are required to give a certain percentage of their income back in the form of dividends to avoid incurring liability from a number of different taxes, most importantly, U.S. federal income tax. So most of them give about 90% or more of their taxable income or earnings back to investors in the form of dividends. So they are very, very good dividend yielding investments. You can see this one here, 4.223%. And for the most part, most of these real estate investment trusts have dividend yields of 4 to 10%. So they're very, very good vehicles for dividends. The one I have up now is one of the most respected real estate investment trusts. It goes by the ticker symbol O there, Realty Income Delaware. This is the company that essentially invests in a whole array of different income producing properties, mostly freestanding single tenant locations for commercial enterprises, large regional and national companies. And the important part is this is one of the most trustworthy companies in the U.S. Financial system. It has a very long reputation. It's got a great reputation. And the most important part is it has a very stable dividend. So over the last 22 years, it's been producing a dividend, and it's had its dividend increase 79 times in that time span. So it's a very reliable dividend, it's a growing dividend, and it's a very, very good company. You can see here it's also a little bit low on the 52-week cycle. You can see the 52-week low is 52.72, and this is trading at 59.46. So sort of in a contrarian investment strategy, this would be a great time to get into a real estate investment trust, especially with the new administration coming out, rolling back a lot of financial regulations. I think the same will happen with income producing properties, real estate regulations as well. And if that happens, I can see these kind of bouncing up like the financial stocks have done over the last week or so, with talk about rolling back some of the regulations in the financial industry. So this is a very, very good company. You can see it's got a great market cap there, 15.47 billion. It's got a nice volume, 633,000, and like I said, it's a very, very good company with regards to its dividend. It's been a stable dividend, it's been a growing dividend, and the company overall is very, very solid. And the other important part is you can see the PE ratio at 54.38. So a lot of investors have confidence in this company moving forward. For a dividend, or for, excuse me, a PE ratio that high and a dividend that high, a lot of investors know this company will be around producing income, and they're willing to pay. If you remember from my last video, or a video this past week here with the PE ratio, they're willing to put in $54 for every dollar of earnings in this particular company. So a lot of confidence in this company. And like I said, in a sort of contrarian investment strategy, it's a bit low on its 52-week cycle. Buying this company would, I think, have a great, great capital appreciation as well if, like I said, some of the administration's policies benefit rolling back some of the regulations in the real estate industry. The other real estate investment trust I have is Apple Hospitality REIT. Excuse me. This is a little bit more of a gamble. This particular REIT invests in a lot of properties that are owned or at least have hotels on them with regards to Marriott and Hilton. So a lot of their properties are essentially those locales, if you will. I say it's a little bit more risky because it's only been paying a dividend out for a couple of years or so. It's got a great dividend yield at 6.022%. You can see there it's a pretty cheap stock as well, currently trading at $19.94. And it's about right in the middle of its 52-week cycle with regards to highs and lows. A little bit newer company, a little bit more risky with regards to its dividend. It doesn't have the same track record that this stock here does, Realty Income Delaware. This stock's 22 years, 79 dividend increases over that time span. One of the 100 most trustworthy companies in the United States. It's been around forever. This one's a little bit newer. It's a little bit lower on the market cap, 4.46 billion, and it's just a bit more risky. But with risk comes greater reward as well. And I can see this company, doubling in value over the next 3 or 4 years. If you take a look at its 5-year history, you can see again it's a very new company. It's been kind of bumping up and down, which, as you can imagine, you would expect with a new company. A little bit uncertainty with investors. Here you can see it's climbed very, very nicely, 102.71% over the last 5 years. Really, it's kind of trended back here. It would have been up even more, 120, 140% or so. So again, the contrarian method, I like this stock. In a more kind of risky investment strategy, I like this stock as well. I think this has a bigger interval to grow, but I think this is the more safe stock. So a couple different real estate investment trusts, like I said, great vehicles for dividends. They have very high dividend yields. They typically have very consistent dividends as well. These both pay a monthly dividend, another benefit about real estate investment trusts. So I don't think you can go wrong with either one of these. I like Realty Income Delaware first. I'm probably going to buy a few of these shares. I already put a limit buy in. I like Apple Hospitality REIT as well, a little bit more of a risky play. But yeah, a couple different REITs here. You guys should take a look at those. If you guys have any other better REITs, let me know as well. I'm just kind of taking a look at this initially. These are the two I found. Again, one speculative play and one more conservative play. But yeah, let me know if you guys are invested in REITs, what you think about the REIT market. Do you think this is a good time to buy or not? Tell me why. And again, if you have any better real estate investment trust stocks out there, let me know. So kind of with that, I'll end the video. As always, if you enjoy my videos, feel free to like, share, and subscribe. The whole point of these videos is to learn about investing. I'm trying to learn a little bit about the REITs right now. If you guys have any good insight into these particular investment companies, let me know. Always looking for new information. So kind of with that, I'll end the video, and we'll see you guys later.